What's your take on the Chinese EV makers overall and, for example, the quality of the product they're putting out at a certain price point?
Yeah, well, I agree completely with what Phil just said. If you look at the Chinese EV products right now, they are very, very good. And listen, the Chinese knew that they missed the opportunity with internal combustion engine vehicles in terms of driving market share, not only in their home market, but abroad. And so they doubled down on the EV market, both from a tech standpoint, a battery standpoint, and from a vehicle design and quality standpoint.
Even Ford acknowledges the undeniable sway of Chinese-made electric vehicles in the global automotive scene. With NIO spearheading the charge, their bold move to infiltrate the US and European markets is making waves. In 2025, NIO plans to launch its Firefly brand in Europe, intensifying the competition. Can NIO truly conquer the West, or will established players hold their ground? First of all, NIO has long been working on an ambitious plan to impact the European electric vehicle market significantly. Their latest move involves the introduction of the Firefly brand in Europe, which is scheduled for 2025. This strategic decision comes amidst a growing trend of Chinese EV makers targeting Europe due to a slowdown in domestic demand and a desire to capitalize on a cost advantage compared to their Western counterparts. The Firefly brand is set to offer a range of family-oriented cars, positioning itself alongside the Alps brand in NIO's lineup. While Alps focuses on catering to families, Firefly is geared towards providing smaller models, diversifying NIO's product offerings for different consumer preferences. Despite the anticipation surrounding this move, NIO has kept specific pricing details under wraps, leaving consumers curious about the affordability of Firefly models. The lack of pricing information raises questions about the potential implications for NIO's positioning in the European market, as pricing often plays a crucial role in consumer decision-making. Of course, entering new markets also comes with its fair share of challenges, and for NIO, the competition with premium car makers like BMW and Mercedes-Benz is a significant battleground. In an industry where brand loyalty is crucial, NIO aims to carve out its niche in the premium electric vehicle segment. The escalating price war initiated by Tesla has further intensified the competition, impacting NIO's profitability as they navigate the pricing and market positioning dynamics. In response to the challenging market conditions, NIO has implemented workforce reduction and cost-cutting measures. This includes layoffs and potential spin-offs, reflecting the company's strategic moves to streamline operations and enhance efficiency in a highly competitive environment. NIO has forged strategic partnerships with industry players like Geely and Changan Automobile to stay ahead in the EV game. These collaborations aim to develop cutting-edge battery packs and chassis architecture, leveraging the expertise of each partner to create innovative solutions. The pursuit of technological advancements through partnerships underscores NIO's commitment to staying at the forefront of EV innovation.
And just like with Huawei, all of these risks are just immediate and undeniable. So numerous studies show that internet-connected EV batteries and chargers have the same sort of cybersecurity weaknesses that we see with large-scale data breaches. You can even maliciously deploy malware onto your EV during charging and then monitor that EV user and even turn off their vehicle for months or even years after that initial infection. And those Chinese battery systems I mentioned are hardly safer. The potential malware could bring down entire electrical grids, studies show. And the reality is that we are already sort of deploying these systems across critical infrastructure without properly vetting them and without really thinking through some of the negative sort of ramifications here.
You see, Europe is not the only arena where NIO is making moves. They've also set their sights on the US market as well. However, instead of setting up local production, NIO plans to import premium electric cars made in China. The decision to skip local production in the US stems from a cost-conscious approach, as establishing manufacturing facilities can be pricey. To sweeten the deal, the US government offers incentives for electric vehicles, presenting an opportunity for NIO. However, it's not all smooth sailing. Potential challenges loom, including concerns about cybersecurity. Studies indicate that internet-connected EV batteries and chargers, much like those proposed by NIO, share cybersecurity vulnerabilities seen in large-scale data breaches. There's a risk of deploying these systems across critical infrastructure without proper vetting, potentially bringing down entire electrical grids. Now, CEO Ganesh Iyer is committed to making NIO cars accessible to a wider audience. Yet, the concerns about U.S. expansion persist. Similar to the risks faced by Huawei, the immediate and undeniable risks of cyber threats could compromise the security of NIO's electric vehicles, raising questions about the prudence of their widespread deployment.
The EU has announced an investigation into Chinese electric car makers. Brussels suspects state help from Beijing is giving them an unfair advantage in the market.
Going back to Europe, did you know the European Union is raising eyebrows over Chinese electric vehicle imports? They've launched an investigation suspecting unfair subsidies benefiting Chinese EV makers, including NIO. This move could lead to potential tariffs on Chinese imports, stirring up the market dynamics. China, not one to take this lightly, has expressed dissatisfaction and is committed to defending its companies. The tension is palpable, and it's not just among policymakers. European car makers find themselves divided on the wisdom of the investigation. Some see it as necessary to level the playing field, while others worry about the repercussions on the overall market. The numbers tell a story, too. The impact of potential tariffs on Chinese imports could ripple through the automotive industry, influencing market shares and trade dynamics. As the EU investigates, the outcome could reshape the landscape of the EV market in Europe, with implications for both Chinese and European players. But before we continue, we really want to thank you for watching this far. But despite these challenges, there's a seismic shift happening in Europe's automotive scene. Chinese electric vehicles are gaining popularity at an unprecedented rate, posing a significant challenge to established brands. The European automotive industry is at a crossroads, grappling with concerns about fierce competition from their Chinese counterparts. Even European Commission President Ursula von der Leyen has acknowledged the flood of cheaper Chinese electric cars entering the market. This isn't just about consumer preferences, it's about the impact on local car makers' profits and the potential threat to European jobs. The numbers clearly show the market dynamics as Chinese EVs carve out a larger share, altering the traditional landscape and forcing European automakers to rethink their strategies. As the competition intensifies, the European automotive industry faces a defining moment. How it navigates this wave of change will determine not just market shares, but the very future of European car manufacturing. The concerns echo in boardrooms and the livelihoods of those working in the industry, emphasizing the urgency for strategic decisions and adaptation to this evolving automotive reality. But have you wondered how establishing collaborations between Chinese and European players in the electric vehicle domain goes beyond just selling cars? It's a deep dive into cutting-edge technology, specifically battery technology. Chinese EV manufacturers are not just eyeing the European market, they're setting up shop, bringing advancements in battery tech that are changing the game. Take for instance the Memorandum of Understanding between Stellantis and Contemporary Amperex Technology, or CATL, for lithium iron phosphate battery cells. This partnership is a strategic move, showcasing the symbiosis between Chinese expertise and European automotive prowess. The collaboration extends beyond bilateral agreements, creating a ripple effect with positive outcomes for the European Union. Engaging with China's EV industry chain doesn't just mean more electric cars on European roads, it means tapping into a reservoir of technological innovation. The statistics back this up, with advancements in battery tech promising cleaner mobility and positioning the EU at the forefront of the global EV revolution. So, as NIO gears up for a global expansion, the automotive industry is witnessing a seismic shift. Real data and statistics underscore the significance of this move. Take a look at the numbers, the growth of Chinese EVs in Europe, NIO's strategic collaborations, and the evolving dynamics in response to the influx of Chinese electric cars. The impact on established players, the tariff tensions, and the collaborations in battery technology are not just a trend, but a revolution. The automotive industry is no longer confined by borders. NIO's push into the US and Europe isn't just a business expansion, but a game changer, challenging the status quo. So, how do you think this global shift will redefine the way we move? Share your perspective in the comments below. And while you're at it, make sure to smash the like and subscribe buttons down below. Additionally, I highly recommend watching this fantastic video if you want to know more on NIO stock. Just click this video right here. Thank you for tuning in, and stay tuned for more exciting content in the future.